To talk about an alarming trend that I've been seeing on social media. I've been seeing many influencers or just, people posting videos in regards to getting people large refunds and having a very minimal amount of earned income or any earned income at all. And I want to kind of talk about that as well as discuss things to look out for, discuss ways that this can be actually be legitimate, that you can actually get paid from the IRS in a legitimate manner. Just as well as just some of these scams to look out for, as we're early in the tax season, and being early in the tax season, the IRS hasn't opened up their e-file system until January 27th. That's when they'll start accepting returns. They do start accepting returns on a test basis prior to that date, but again, it's a test basis. Your return may or may not be pulled if you hit file prior to. And then just keep in mind, for some of the other credits, such as the earned income credit, that credit does not get processed until later in the month. And I'll show you all this on the IRS website. So pretty much I'm going to use sources here, legitimate sources, and kind of go into detail. So the example that I had seen the other day was, I'm just going to use round numbers. Somebody had made $20,000 and got about an $8,000 refund. And a lot of times people say, well, how is that possible? How am I not getting any money? Because everything I hear on the news is, well, you file your taxes, you get a large refund. Well, that's not the case. The way that they're able to do that, to make that little bit of money, not paying any taxes besides your FICA taxes, is through refundable credits. So refundable credits are credits that are just that you don't have to pay any tax in order to get them. So basically, if you have, so an example would be the child tax credit. Child tax credit is worth $2,000, or $1,700 of it is refundable, which means you get a full $2,000 credit if you had at least $2,000 paid in, or your tax liability was at least $2,000. If it is not at least $2,000, say your tax liability is $1,000 or zero, you would get up to the $1,700, which is refundable, meaning that you actually get paid money to have that child. So again, these are going to be scams that are mainly targeted towards lower income individuals. And again, that's kind of why I wanted to bring it up, because, part of my whole channel is to educate people, keep people informed, and, kind of just let you know what's going out there. And, it gives the profession a bad rap, basically. So, I kind of wanted to clear the air on a lot of these items. So let's kind of just discuss how you can end up getting this large of a refund. Well, the first thing, as I had mentioned, is the child tax credit. So again, looking at the IRS's website, we can look here at the child tax credit, and again, kind of skimming down the page, as I had mentioned, you could see here, so $1,700 for each qualifying children. So let's just say in general that you had two qualifying children, and we'll just say you get $1,700 for each, so we'll do plus that, plus $1,700. So now you're at a refund of about $3,400. So the next item that you can get is known as the earned income tax credit. This is the one where I find that where these websites or where these particular taxpayers may be providing fraudulent returns. Now, there's no guarantees that they are, or there's no guarantees that they're not. So if something sounds too good to be true, it is too good to be true. So basically everything here is posted on the IRS's website. No matter what tax software you use, whether you use Paid Professional A, Paid Professional B, you use a national tax preparer, you use a national tax preparer software, and you do it yourself, the outcome should still be the same regardless. So I'm going to show you how that basically works, and then I'm going to talk to say how I think that these individuals are manipulating income limits to maximize the credit. So in order to qualify for this, and I had made a video on it before, so I'm not going to go too much in detail, but you can use this. This is a virtual assistant where you can basically go put in your tax situations and fill it out and go through it and then see what the results are. But I'm not going to end up going through that. I'm kind of going to go more into the mechanics of what makes up for the credit. So we're going to click on who qualifies. And again, we've made a video on this, so we're not going to go too much in detail. So you have to have earned income. Your investment income needs to be below $11,000. You have to have a valid Social Security number. You must be a U.S. citizen or resident, and you must not file a Form 2555. So all those items must be present. Again, now you also, if you have a qualifying child, so if you got the child tax credit, so let's just use the example of you do actually have two children. Those two children live with you for greater than 6 months out of the year, because that is a requirement both for claiming as a dependent as well as for claiming the earned income credit. Now, here's where things get a little bit, where I end up having a little bit of issues is because the actual tax law states that, but there are people that are divorced and they have a divorce decree that states otherwise. So, again, if your divorce decree states otherwise, you can go off of what the divorce decree is. It's basically what you have it's your tax position, what you have supporting documentation for to state. So let's go to the earned income tax credit tables. Again, here's what I had talked about before. It's talking about types of earned income, what you can do, what you can't do along those lines. But again, we're not going to go too crazy for that. We're just going to look at we're going to look at the tables. So for year 2024, so again, these are qualifying children. So using in our example, we have 2 qualifying children. So we are going to be max amount for filing single head of household or married filing separate is $55,768. Max amount to get the credit is $62,688. So again, as you can see, these income limits are very low. It's going to be hard to support a family of 2 on these income limits. So again, that's really where these people come out and they try to prey on individuals. So those are the max amounts that you can get under the credit. Now, it doesn't specifically mean that you can, but it is. So now kind of going down to here, the max credit you can get with the 2 qualifying children is $6,960. Now, not everybody is going to get that $6,960. I will actually show you the chart, and we'll kind of go through that relatively quickly. But again, now here's the earned income chart. It looks a little intimidating, but this is basically your chart. So again, looking at your adjusted gross income. So if you just take a look at, say, okay, what is how much money did I make? Do I have one W-2? If I have one W-2, let's see how much money is on there. So again, you're going ranges. So from $150 to $200. So as you can see, these are nowhere near the max credit. So on those lower income individuals, like really low income individuals, you're not going to get that max credit amount for if we did 2 of $6,960. So again, 2 dependents, let's just say we'll go in the first column that we're single and head of household. So as you can see here, $1 to $50, you're only getting $10. So kind of let's just scroll down through the chart, and you can kind of see it starts creeping up. The credit starts creeping up. Again, the credit starts creeping up. We're still not at that max $6,000 yet of what we had said for the credit, but again, it's creeping up. We'll keep going until we get to the max credit amount. When we get to the max credit amount, you'll notice that it pretty much levels off and it'll stay there. So here we are. We're at the max credit amount. So your baseline for getting that max credit amount is $18,400. So $18,400 of adjusted gross income, having 2 kids, being single, head of household, will get you that max credit. And then let's see where it starts to phase out. So really the max credit sweet spot is that $18,400 to $21,600. After that, it starts to phase out. So as you can see down here, you get to $24,800, it starts phasing out. So you're at the $65,17. And then if I continue to scroll down the entire chart, you will see that again, that's where the credit starts to phase out. So here's where I think that these particular individuals posting on TikTok, I don't know if they're 100% doing it, but what they're presenting is definitely deceiving, and it's not 100% accurate, because if they are actually doing it, it is illegal, and they can end up getting fined, as well as you can end up getting fined if you do file a fraudulent tax return. So what I think people are doing is I think they're manipulating the income to fall within this sweet spot. So knowing your particular tax situation, they can go in, manipulate income to get you within this sweet spot category. You're still not going to owe a tax. You're not going to have any tax due. So you're basically going to have 0 tax due. They're going into your return and they're going to say, all right, well, we got to do a little bit of income, maybe in self-employment. Although if they do the self-employment aspect of it, you will end up with self-employment tax, which is the 50% of Social Security and Medicare that you'd have to pay in. So it ends up, I should say 100%, because that ends up being about roughly 15%. But again, if you're getting a refundable credit, it's going to kind of wash itself out. So that's really where I think that people are ending up doing it. My biggest suggestion would be is do not get involved with any of these sort of organizations, scams. I call them scams. Don't get involved with any paid professional that's offering and telling you that they can get you, this huge refund, and they're going to do better than another place. Pretty much no matter where you go, if you go to a reputable place, you're pretty much going to get the same refund no matter where it is that you go. As long as you go somewhere reputable and you don't have a complex tax situation. If your tax situation is complex, then you might want to go to somebody that has a little bit more experience. But for the most part, if you go to a national tax prep service, if you go to somebody local, your refund's ultimately going to end up being where it is. If you do it yourself, it's going to ultimately end up being where it is. There is no special anything that's going to cause you to get more money. Again, you're just going to put yourself more at risk. So similar to what I always say is you want to have the least amount of touch points with the IRS. And by manipulating this credit and doing things that shouldn't be, or hiring a professional that's going to manipulate the credit, that's somebody that you want to stay away from. I also wanted to bring up Circular 230, which prevents any paid professional for taking a contingent fee based on a tax outcome, tax position, or anything else. So basically what that means is they can't come out and charge you a percentage of your refund saying, hey, if I get you a bigger refund, I'm going to charge you X for a fee. They can't do it. It's not allowed under the IRS. So again, be on the lookout for those items. As well, what a lot of these places are proposing to you is the IRS won't start sending out refunds for the earned income tax credit until late February. And I can show you right exactly on the IRS's website. When can you expect your refund? It says it right here, first paragraph. You can get your refund by February 27th. That's the ultimate earliest that you'll get it. So what a lot of these places are doing is they're doing loans, refund advances, and they won't give it to you 100% on it because there's a level of risk. Because the IRS could come out and say, well, listen, we're not going to give it to you and whatnot. So the loans come with a high interest rate. Some of the other items don't come with an interest rate at all, and they give you a small percentage based on your particular tax return. A lot of times, most tax softwares, if they're not going the loan route, they will not give you a loan. They will not give you an advance towards the portion of the earned income tax credit. So you may only get it towards the child tax credit because that's basically a given, because if your return gets accepted into the system, they can basically guarantee that you're going to get that child tax credit because nobody else had claimed it. So again, they'll typically won't do it off the earned income tax credit, but you could get it off that child tax credit. I don't like them because number one, they charge fees. Some of the fees are less than others, so depending upon where you go, they charge high fees. If you do actually get the loan, it's a high interest rate. It's just not worth it. And I just say, listen, you know what? Just budget your money and get to the point where you can actually get there, and wait until that February 27th point where you don't actually have to pay any more money. You don't have to pay a huge amount. I've seen people paying $5, $6, $7, $8,000, just to get their money early. And it's like, think about if you had that extra money in your pocket, had you just awaited, an extra month. So I always just suggest don't go those routes. A lot of times it's more harm. It does more harm than what it's good. So meaning what happens is the money, the IRS actually direct deposits the money into a third party's account, into a bank account. And then the organization, whoever lent you the money, will pull their portion of it and the fee, and then you'll get the difference. But sometimes this money gets lost, meaning it gets put into the wrong account, or it doesn't get linked up to you correctly, and then you just run into all sorts of headaches. And then you try to call the 1-800 number of the tax software that you use or the company that you utilize to file your tax return, and it just ends up becoming a huge mess. So you're better off just not getting involved in it, just having it direct deposited into your own checking account and calling it a day. The last item that I want to discuss is the repercussions of basically filing an incorrect return. So number one, there's steep penalties. So you're going to potentially could get about a 22% tax penalty. I'm just looking at here we go. A 20% penalty on it. So here you go. So the penalty is 20% of the excess amount. And then as well as they could make you pay, they will also make it pay. You may also have to pay it back if you were determined to file incorrect return. As well as you will be banned from taking all credits. So if you filed an incorrect earned income credit, whereas like you did what I said, and you falsely increased your income to maximize your credit, or vice versa, you falsely decrease your income to increase your credit, you're going to be banned from all the credits, and you could be banned for 2 years, or you could be banned indefinitely. And then what will basically happen is you have to fill out a form 8862 when you're eligible again. The IRS will put that down on there, and like I said, again, here's everything you need to know. It would be a CP74 notice, basically notifying you of it. So there's two different options. So 2 years after the IRS made a final decision to reduce or deny your earned income tax credit, This is due to reckless or intentional disregard of the rules. So this would be whether you did it, whether a paid preparer did it, any of the above. The IRS determines that you manipulated your income so that you can get a larger credit. They can deny you for 2 years. And if you absolutely did it because of fraud and they can prove it, it's 10 years. So imagine that. Imagine manipulating your credit for a little bit, whereas you'd get your $3,400 no problem. Had you filed the correct return, and maybe instead of $6,900, you'd get $3,000 earned income credit legitimately. So you'd be at $6,400. So you'd still be at a pretty solid refund. But if you manipulate the credit, you could be out of that money every single year, all because you wanted to try and get a little bit extra money. It's not worth it. The IRS is a pain to deal with. Minimize your touch points. Utilize a reputable tax preparer. Utilize a reputable tax preparer software. Stay away from the loans. Stay away from the advances, the refund advances. Again, I just strongly suggest just not doing it. And finally, like I said, no matter where you go, you can even price it out. You can even go to a local guy. Well, a local guy will probably charge you, but the national brands won't charge you. You can go prepare your return or have somebody prepare your return, see the outcome, and then go somewhere else, and I'll guarantee you that the outcome is going to be about the same, as long as it's a reputable preparer. Just items to keep in mind. I just don't like people looking at social media and saying, hey, yep, I'm going to get a large refund, or frequently people call and ask me why they're not getting a big refund. And there's only a couple components of your refund. Number one, you overpaid, and if you overpaid, you gave the government an interest-free loan during the year where you could have had access and use to that money equally throughout the year. Granted, not on as great of a scale, but you could have invested it, put it in another account, or just used it for your normal bills. Number two, you have a refundable credit or a non-refundable credit. So if you have children, that's a refundable credit. If you pay for daycare expenses, that's a credit. And then you also have earned income credit if you're a lower income individual. So again, just keep that in mind. So anybody filing an earned income tax credit, your refund will not be processed till the end of February. So again, that typical window that the IRS gives of like 3 to 6 weeks, you're going to be closer to the edge of the 6 weeks, especially if you file it right on time. Child tax credit, they don't hold back for that. So again, if you have just a child tax credit, no earned income credit, you probably will get your refund within a couple weeks of filing your return. But hopefully everybody found this video helpful and useful. And again, like I said, just be wary of what you see online. It's not all true, and always file complete, accurate tax returns utilizing qualified individuals to help you out, or using a qualified national tax preparation software. But if everybody found this video helpful, please like and subscribe. I'd appreciate it, as well as share if you don't mind. Any support to the channel would be helpful.